To better understand how business taxes work, let's have an overview about the whole concept. Number one, how are small businesses taxed at all? Now, the whole thing here is that you might be surprised to learn that most small businesses do not pay the corporate rate for income tax. In fact, 75 to 80% of small businesses are not considered corporations, but something called unincorporated pass-through entities. This means what? It means that they pay the owner's personal rate according to the IRS latest statistics. So what we're talking about here is what? We're talking about if you have an LLC, those are pass-through entities. If you have S corporations, those are pass-through entities. If you have single-member LLCs, or if you have sole proprietorships, all those are considered pass-through entities because everything happens at the personal level of the owners. Very important to understand. So when we talk about how our small business is taxed, the only small business that is taxed at the corporate level is the C Corp. So if you are a small business and you have actually adopted the C Corp structure, you'll actually have to pay taxes at the business level and also at the personal level. That's why experts called what? Double taxation. Very important to understand that, okay? So here is a list of taxes for small business owners. You have income tax, federal and state taxes as applicable. You have self-employment tax. So this covers Social Security and Medicare. So most small businesses will need to pay this tax, which is currently 15.3%. And then you have payroll taxes, very important. So a small business must pay 7.25% of an employee's gross payroll. So unemployment and workers' compensation taxes actually may be extra. So you have income tax, self-employment tax, payroll taxes. You can have in some cases capital gains taxes. So this is taxation on investments or sale of your assets, and assets held more than a year are taxed they're taxed at 0, 15 or 20% depending on the overall income. So higher rates apply to higher incomes, and assets held for less than a year are considered part of the business income, and they are taxed according to income brackets, either at the personal level or at the business level. And you also have property tax. So any buildings or land owned by the small business will be taxed. Okay, so property taxes vary from 0.18% to 1.89%, depending on the state. You also have dividend tax, and dividends resulting from investments made by a small business are considered income and taxed according to the owner's tax bracket or the corporate tax rate, depending on the company's structure. Now, let me talk to you a little bit about an EIN. What is an EIN? By the way, boss, welcome back to the show. We're really happy to have you here and tune into this conversation. We're quickly talking about how business taxes really work. So I want to talk to you about an EIN because this is important. Typically, most businesses need an employer identification number, EIN, also known as the federal tax identification number. So this 9-digit number expressed as XX, and then you have 2 digits first and then the 7 digits afterwards. This number is used to identify your business on all business tax reporting returns and forms. So I'm speaking about your 1040 if you have a single member LLC, also proprietorship. I'm speaking about your 1065. I'm speaking about your 1120S or 1120. So you will need an EIN if you answer yes to any of the following questions. Do you have employees? Is your business a corporation or a partnership? Do you file employment, excise or alcohol, tobacco and firearms returns? Do you withhold wages on income other than wages paid to a non-resident alien? Do you have a qualified retirement plan? So those are 5 important questions. If you answer yes to any of them, you need to have an EIN. And a bank, by the way, a bank will want your EIN before you open a business bank account. So it's really, really important. And this is not just for tax purposes, okay? Some vendors, if you're trying to build business credit, vendors might ask for your EIN, okay? So this is important. So you can apply for a new EIN online. There is no charge for this service. So please beware of any private website that charges a fee to apply for an EIN, okay? You can also apply by phone, fax or mail. Simply complete a return form SS4, which you can actually download from the IRS website or request by calling 1-800-TAX-FORM. And the thing is, we have committed an entire show to this topic, SS4. So if you are interested, please let us know in the comment section, and we'll certainly email you the link. Okay. And if you apply online or by phone, you can get your EIN quickly. A fax application may take 1 or 2 weeks to be processed, and a mailed application could take up to 4 weeks. So make sure you have your EIN before you file your first return or make a tax deposit, so the IRS can track your transactions quickly. I want to talk to you about the small business tax rate by state. By the way, boss, today's topic is very simple. We are trying to understand how business taxes work this year. So what is actually the small business tax rate by state? Well, state income tax has changed a lot thanks to the Tax Cuts and Jobs Act, as well as other state taxes. Not all states have income tax. In fact, some states have business taxes that are more favorable to small businesses than others, according to our research. For example, let me give you an example. Florida is one of the best states because it has no individual income tax, and Nevada has no corporate or individual income tax, and New Hampshire has no sales tax. And the most favorable states usually lack a major tax. Okay. On the flip side, the worst states, quote unquote worst, include New York, California, and New Jersey. And the common factor is high tax rates. So for example, New Jersey not only has high property taxes, but also has the second highest corporate income tax in the country. And they also have an inheritance tax and badly structured individual income taxes. Okay, so this is really important that you have to have a clear idea. So the whole thing is that when we talk about the small business tax rate by state, you have to make sure that you have to think about sales taxes. Okay, you have to think about now when we talk about sales taxes, you got to analyze this equation not only as a consumer but also as a business person. So as a consumer, you are familiar with paying sales tax whenever you purchase goods from a retailer, unless you live in one of the 5 states that do not have a general sales tax. And the sales tax is collected from the buyer by the seller, who then forwards it on to the state. As a business person, you are the seller, so it is your responsibility to collect, report, and pay actually sales tax on most everything sold to a customer in a state where your business has a physical presence. Okay, this means what? It means the state where your physical building sits, where your employees are living or working, or where your warehouse has inventory. This is important. But sales tax rate, okay, and regulations are set by each state. And what happens here is that the rules are very different. Okay, it's very important. So when you have to think about, there is some kind of paperwork involved in collecting sales information. Okay, sales tax information, very, very important. I want to talk to you quickly about, boss, how much does the average small business pay in taxes? This is an important element for you to be clear about. Now, small businesses of all types pay an average tax rate of approximately 19.8 to 22%, according to our research. Okay, and the thing here is that small businesses with one owner pay a 13.3% tax rate on average, and ones with more than one owner pay 23.6% on average. And small business corporations, known as small S corporations, pay an average of 26.9%. So they are the category that pays a lot more. And corporations have a higher tax rate on average because they earn more income. So this is easy to understand if you were to think about it, because the thing is that if you consider that over 18% of small S corporations earn at least $100,000 a year, while almost 60% of small businesses with one owner earn less than $10,000 net. Okay, so this is important. Now, when we talk about paying small business taxes, you got to think about self-employment taxes, because the IRS considers you self-employed if any of the following applies to you. See, we're speaking about how small business taxes work, but the thing is, if you are a sole proprietorship, if you are a single member LLC, If you are a single member S corporation, the IRS looks at you, the IRS considers you what they call a disregarded entity. And if that's the case, you might need to file self-employment taxes, okay? So the IRS considers you self-employed if any of the following applies to you. You are in a trade or business as a sole proprietor or independent contractor. You are a member of a partnership or LLC that carries on a trade or business, okay? And you remember that LLC members may be treated as employees if the business makes an election. And you are otherwise in the business for yourself, including a part-time business. If that's the case, then you have to actually pay taxes, pay self-employment taxes. What about husband and wife ventures? Now, there may be some tax advantages for a business run exclusively. And the key word here is exclusively by a husband and wife. Okay, and so this, the IRS and the tax laws allow a husband and wife business to avoid being treated as a partnership for federal tax purposes. Instead, each spouse is treated as a sole proprietor, and all income, gains, losses, credits, and tax deductions are divided between the spouses based on their respective interest in the venture. So this is important. Let's talk about how much can a small business make before paying taxes. What is the threshold? Boss, I just want to quickly remind you about today's topic. We're speaking about how small business taxes work for real. And so the thing is, all businesses must submit an annual income tax return according to the IRS, okay? So the exception is partnerships, which have to submit an information return instead. When we talk about partnerships, we're speaking about Form 1065. Okay, so if you have a partnership, you have to submit Form 1065. And if you have employees, employment taxes such as Social Security taxes are mandatory. And business owners who earn less than $400 can skip paying the self-employment tax, but that's the only tax you can avoid. And this is very good, and this is really important now. And so that's at the federal level. So that's actually the threshold before the monetary threshold before you actually have to pay taxes. Now, thankfully, the IRS probably will not be interested in auditing your small business until you turn a profit. But it's important to still file your taxes even if you are sustaining losses in order to take advantage of deductions and avoid legal issues down the line, right? And so that's for the federal level. Don't forget the state level, because you got to really understand also how the state, you have to understand the correlation between your state taxes and your business taxes. So your business tax obligations do not stop at the federal level. State and local government agencies want slices of your revenue too, right? So what about state income taxes? Now, nearly every U.S. state, as I said before, has a business or a corporate income tax on their books, and your tax requirement depends on the legal nature of your business. Let me give you an example. If you are an LLC, a limited liability company, you will be taxed separately from the business owners, while sole proprietors they use the same tax form to report personal and business income taxes. And also don't forget the state employment taxes. So in addition to federal employment taxes, you must pay certain state employment related taxes as well. All states require payment of a state workers' compensation insurance and unemployment insurance taxes. And the following states or territories also require businesses to pay for temporary disability insurance. So you have California, you have Hawaii, you have New Jersey, you have New York, you have Rhode Island, and you have Puerto Rico. Let's talk about how much should a small business set aside for taxes. This is important because you got to think about your cash flows, and the last thing you want is to have actually receive a bill from the IRS and not be in a position where you can pay that bill real quick. So how much should your small business set aside for taxes? It's important that, in our view, in our research, 30 to 40% is a great ballpark. It's a comfortable, it's a manageable range, okay? So set aside 30 to 40% of your income to cover your federal and state taxes. remember, you'll be paying this taxes quarterly. So you want to set aside funds regularly. Don't do this every quarter. No, you want to do this maybe once a month or twice a month. So you have enough funds when you have the quarterly deadline. You have enough funds in your account to actually take care of those quarterly payments. Okay, you may be able to save less depending on what type of small business you own. So when you set aside money for taxes, you have to think about what really works for you. The timing depends on how established your business is. If you are new to the small business game, you want to try setting aside at least 30% every time you are paid. 30%. This should be the rule of thumb. You just got to do it reflexively. Do it automatically and reflexively. If you recently turned a profit, you want to sock away your 30% on a monthly basis. And if you have a profitable operation that is fairly stable year after year, you want to take last year's net income. You want to divide it by 4, then take 30% of that number and plan on saving that amount quarterly. Okay, very important. So the bottom line is what? It is a good idea to put funds set aside for tax time in a separate business bank account. Even better, you want to have automatic transfers either monthly or quarterly to this separate account. Okay, don't worry too much if you underestimate the amount owed. The IRS says that as long as you pay as much taxes quarterly as you did the previous year, you fall under what's referred to as a safe harbor rule. Okay, so that means you will not be penalized for underpaying. So this is important to actually remember that, it's not, people always say, well, if you don't pay your taxes on a quarterly basis, you'll be penalized. No, you have that safe harbor rule that actually sort of shields you. I want to talk to you about employment taxes. And this is something that a lot of small businesses have to really care about. And so there are actually 3 steps that you need to follow to file employment taxes. Now, one thing we actually suggest to our clients, business clients, is you want to outsource the whole operation. In other words, you want to ask ADP, or you want to ask those ADP or its competitors to actually take care of that for you. Now, if you want to actually understand the whole information by yourself, you want to do things by yourself in your company, you want to have an in-house staff to take care of that, then it's important to understand that when we talk about employment taxes, you have actually three steps. So you have to deposit employment taxes, you have to report employment taxes, and you have to maintain tax records. Okay, so running a business with employees definitely adds several line items to your tax responsibilities. Specifically, you are required to report and deposit employment taxes, which include federal income taxes, Social Security and Medicare taxes, and the federal unemployment taxes, the FUTA taxes. Okay, and so depositing, you have to deposit. So you must deposit any federal income tax withheld, plus both the employer and employee Social Security and Medicare taxes. So the IRS has monthly and semi-weekly deposit schedules, and you can actually determine which schedule applies to your business by reviewing IRS publication 15 or 51. They have that on their website. And for FUTA tax deposit, they are required for any quarter in which the tax is more than $500 and must be made by the end of the month following the end of the quarter. And the FUTA tax is paid entirely by you, the employer, and is not withheld from your employees' wages. It's important now. All federal tax deposits must be made electronically through the EFTPS, the Electronic Federal Tax Payment System. To enroll, you want to visit the website, or you want to call 1-800-555-4477. Again, the number is 1-800-555-4477. So you also have to report employment taxes. So generally, you must report wages, tips, and other compensation paid to your employees by filing Form W-2 with the IRS at the end of the year. This is in addition to reporting the taxes that you deposit. So the reporting of income, Social Security, and Medicare taxes is done each quarter using Form 940, 941, and 944. And the cool thing is you can e-file those forms too. You have to maintain tax records, boss. You should keep all records associated with your employment taxes, including amounts and dates of all wage and pension payments made to all employees for at least 4 years. 4 years. Let's finally talk about an important element here, and which is that your business structure can affect your taxes. Okay, boss, we're still having a general conversation about how business taxes work, and your business structure really affects your taxes. You want to set it up right the first time around. A trait that many successful business people share is that they acknowledge the need to do it right and do it right for the first time. To get started on the right foot with determining your ideal business structure, you want to go to, or you want to have, either you want to have a lawyer on your team or you want to do research. Okay, and it's really important to actually understand, because taxes actually are part of your business and can be part of your business for a long time. Okay, and so there are 6 business structure options to choose from, each with different income tax implications. So you have the sole proprietorship. So if you are earning business income, even if you have not registered with the IRS or a state agency or formalized your business, you are considered a sole proprietor if you don't have a partner. So for a sole proprietor, your business income is reported directly on your personal federal income tax return, which means your business does not owe taxes separately. Instead, you will pay taxes on your business's earnings at your individual federal income tax rate. What about partnership? Well, in this arrangement, taxable income from the business flows through to the partner's individual income tax returns via Schedule K-1, generally depending on the percent of the partnership owned by each partner. So if you and your partner own the business 50-50, you will generally each pay taxes on 50% of the income, but you can also create a partnership agreement with an income allocation that differs from what the ownership percentages may otherwise dictate. Okay, if you have an ALP, a limited liability partnership, this is kind of similar to the LLC treatment. So you will have to actually you pay taxes at the personal level, but the business actually files an information return. If you're an LLC, the treatment is similar. You actually get an information return form 1065, and you actually attach to that form Schedule K-1. What if you're a corporation? Well, 1120 will actually apply. Remember that the U.S. federal corporate income tax rate is currently 21%. And if you are a nonprofit, actually, it depends on the state. It depends on how you, what kind of nonprofit you are. But yeah, I mean, it'll be too long to explain here. But one thing I want to say here is that if you have questions about a nonprofit type of corporation, please let us know in the comment section. I will certainly get back to you. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how business taxes work. We spoke about how those small businesses are taxed, what is the tax rate by state, and how much does the average small business pay in taxes, how much can a small business make before paying taxes. We're speaking about the monetary threshold here, and how much should a small business set aside for taxes. We also spoke about the 3 steps to filing employment taxes and how your business structure can actually affect your taxes. Thank you so much for your attention. I appreciate it. I will see you next time. But until then, remember, stay marvelous.